But Karan Taurani also joins us from Elara Securities to talk to us about this deal. Karan, hi, good morning. Thanks so much for making time and speaking with us. Your first take, what does it add to Zomato? Does it come at a good price, or do you think this was slightly expensive? And does it really make it a very strong player in this entire going out business?
Hi, Anisha. Good morning. So I think if you look at this acquisition rather in terms of valuations, I think it's quite reasonable. One would not call it, very attractive, but you have to articulate the fact here that there are only two players in the live ticketing business today, which are large in nature. One of them is Book My Show, and the other is Paytm, which have got certain amount of scale. So Zomato here, is known to turn around companies. We've seen that in the case of Blinkit. We've seen that in the case of the food business, wherein they entered the food business much after Swiggy had entered. And they are doing ahead of Swiggy in terms of numbers and market share, so on and so forth. So I think clearly this market has an opportunity to grow at about 20 odd percent. The business, does make an EBITDA margin of about 10 to 15% on a steady state. But the management has guided for a very strong EBITDA margin in the medium term, for this business, towards more than 20-25%. So I think margin execution is key from here on. How do they kind of achieve these kind of profitability levels is going to be a key monitorable. Otherwise, as far as market is concerned, they have that cloud. This will give a much needed boost to their currently going out business, which is somewhere around 400 crores in terms of annualized basis revenue. And I think Paytm is also is kind of making an EBITDA margin of about 10 odd percent. So net, I think it seems like a good acquisition because clearly Zomato has got a large customer base of the youth audience, which is hooked on to the food and the quick commerce business. And this can only, add to the positive impact, in terms of cross-selling, upselling of the user base across various apps.
Karan, in your note, you've talked about the convenience fee business and as to how this is going to be the sizable opportunity, numbers of almost 1 billion rupees as well doing the rounds. Elaborate a little bit more about that as to how this is going to be a money earner for Zomato.
Right. So if you look at most of these live events rather, and the online ticketing business, almost about two-thirds of their revenues, comes through convenience fee, and the balance one-third is through live events business. Now, this convenience fee revenue segment is rather sticky in nature, wherein it's the revenues are kind of predictable, and the growth will depend in terms of how the events shape up in terms of the cinema chains, the sporting events, the live events, everything put together. So broadly, if you look at the live events market today in India, it's about 9 to 10,000 crores. And if you look at the cinema industry market, it is again about 10 to 12,000 crores. So putting that into perspective, we get a number of about 1,500 crores, which could be the convenience fee market today in India. Basis 7% of this entire 20,000 crores, which I gave you right now in terms of numbers. Now, this is growing at about 15-20% on a steady state. And if you look at peers, I think, Book My Show is a market leader with about 45% market share over here. And as per our assessment, broadly, Paytm would be the second largest, after Book My Show, as far as convenience fee is concerned. So I don't see any kind of changes in terms of that convenience fee of 6 to 7%. But definitely, because of the growth rate in terms of, the ticket prices increasing, in terms of footfall increasing, in the live events business, in the sporting events, the cinema chains, you will kind of see this growth of 15-20% going ahead from here on.
Karan, already at 260. Are you already upping the price targets in Zomato further then?
So I think we already, kind of raised our target price from 280 to 320 basis the Q1 performance, and I think we'll, leave it at that because of this acquisition so far, there is no big delta in terms of revenue upgrade or earnings upgrade. If you look at the going out business, we've valued this at about 3 to 3.5 times EV sales, and currently the number was about 400 crores, which could have grown to about 7 to 800 crores on an organic basis. But because of this acquisition, we believe that this could be a 4.5 to 5,000 crore forward valuation business. So, basis Zomato's EV, this does not have a big positive impact. It was at about 1% of the console EV. Now, after the merger of this, you could see this contributing to about 2% of the total EV. So there's no big delta as such, in terms of target price because of this business. But as I said, definitely a lot of synergies to explore, a large customer base. And I think this event business is exciting in India, given the kind of variety of events that we're seeing today in the country.
Okay, point taken. Thanks so much, Karan, for joining us early this morning. So that's a take coming in. Definitely a positive for Zomato.
If you like this video, then like, share and subscribe to ET Now.